Hello everybody and welcome back to the Open Interest YouTube channel. I'm MLCO. Please remember, if you like this type of content and want to be alerted when we release new videos, be sure to like, subscribe, and hit the notification bell. Also feel free to send us your thoughts or questions either in the comment section below or by sending me a tweet at Michael_Co. Equities stabilized a bit today as traders began to wonder whether the central bank might finally do the right thing. For over a year, market participants have been agonizing over inflation risks, but these concerns and the data were largely dismissed by central bankers who said it was transitory. Begrudgingly, Fed Chairman Powell withdrew the transitory label, but now that his reappointment is behind him, his legacy lies ahead, and the chorus of pleas, both inside and out of the central bank, to act on the highest levels of inflation in 40 years is finally starting to resonate. Mohamed El-Arian, commenting about the steepening curve we saw today, said that the levers the Fed intends to pull, reducing the Fed's balance sheet, is responsible. The yield curve inverted on April Fool's Day, meaning short-term rates on U.S. Treasuries exceeded long-term rates. In this case, I'm referring to the 2s versus the 10s. The alarm this caused is because this is an unusual circumstance that many observers view as a sign that the economy could be headed for a recession. High levels of inflation are poisonous to an economy, reducing both the standard of living and potentially incentives to invest. St. Louis Fed President James Bullard said he prefers raising rates to 3 to 3.25% in the second half. And while that's higher than where they are now, that is still substantially below inflation, meaning real rates would still be negative. Roughly 35.5 million listed options contracts traded today. So let's take a look at some of the more notable trades. The largest single options trade in contract terms today was in Opendoor Technologies, ticker OPEN. The San Francisco-based digital real estate services platform is down roughly 50% year to date. 70,000 January 12.5, 15.5 call spreads traded. It should be said that the open interest in those two options is substantial, and it's possible a hedge fund could be unwinding a position entered into in mid-February. According to recent 13Fs, Candlestick Capital had a substantial position in open call options. The Greenwich, Connecticut-based hedge fund also held just under 5.7 million shares of open as of that same 13F. Candlestick was founded by Jack Woodruff in 2019. He had previously worked for Ken Griffin at Citadel. HYG, the high-yield bond ETF, we've talked about this several times, saw more sizable put spreads. We've highlighted that type of flow several times over the past couple months since we began doing these segments. HYD is down 6% year to date. The most recent trades see the potential for further weakness. However, the sentiment is not quite as bearish as it has been over the past 2 months. ChargePoint, ticker CHPT, saw a large put spread trade today. The April 17.5, 15.5 put spread traded 30,000 times. That was opening. The White House held a meeting with major automotive leaders to discuss the creation of a nationwide network of 500,000 EV chargers. Although Senator Joe Manchin, Democrat from West Virginia, who has not exactly towed the party line, recently again pushing back against the White House by saying that he would not sign up for the administration's strong EV push. We were asked yesterday about unusual volume in the green energy EV space. This would most certainly qualify. Interestingly, Elon Musk was at the White House for this meeting. He and Tesla, far and away the most important participants in the EV space in the world by a huge margin, have been snubbed and unmentioned by the administration in the past. Given Tesla has done more to advance the cause of EVs and produced more than any other maker by an order of magnitude, the company delivered over 310,000 EVs in the first quarter of this year, by the way. Politicians who try to play favorites look foolish by failing to mention the Austin, Texas-based company. KGC, that's Kinross Gold, traded a large ratio call spread risk reversal, targeting a move to between $6 and $8 a share by September expiration. We also saw a big block in Ford of the May 13 puts. Opening looks like a likely seller who may be drawing a line in the sand, willing to get long Ford at a discount to the current stock price if the recent weakness continues. Today's move was propelled in part by a downgrade by Barclays. However, the reasons given, which was supply chain issues, were already pretty well known, and the report appears to be kind of securing the barn door well after the horse has left. So I'm kind of inclined to be bullish for it here. I sold a couple of those May puts myself today. MLCO, that's Melcor Gaming, which is down over 30% so far this year, saw well above average call volume. I suspect This may be Melvin Capital selling their position. The hedge fund, which reported losses of roughly 20% for the first quarter of this year and was in the spotlight last year following an ill-fated bearish bet in GameStop, the Reddit Rebellion meme stock, showed a holding of 23,000 of calls in MLCO on their most recent 13F. And finally, we'll finish this segment where we began, with rates. As we mentioned, long bonds have been hard hit as rates have risen off the December lows, and it seems some traders believe the downside pain could continue even in the near term, and that move could potentially be significant. A trader opened a new position in the April 118 puts, paying 14 cents for 20,000. Now that's an outlay of only about 280,000 in premium, not huge for the treasury markets. What's notable instead is that the trader is appearing to target levels not seen since late 2018, and that's significant because that swoon was the fallout from the last Fed taper tantrum and also happened to be accompanied by a very sharp sell-off in U.S. equities. I'm Mike Coe, and that's all I have for you today. If you would enjoy this kind of content, please be sure to like, subscribe, hit the notification bell, share it with others. Thanks for watching. If you liked the content, please consider subscribing to the Open Interest YouTube channel. That's youtube.com/open interest. And of course, you can also follow or tweet me at Michael_Co, or go to our website, www.openinterest.pro. Thanks for watching.